Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 24th. We do got a couple items here on the economic calendar. We'll start off with the Case-Shiller Home Price Index for the month of July. June was slightly revised a little higher at 3.2, so it basically remained unchanged in the month of July, which is actually kind of good news because we've been seeing this come down further down every single month, and it's kind of nice to be able to see it at least plateau or go upwards rather than continuously going downwards. So that's, of course, has a lot of people a little bit excited as well. Last but not least, we got the consumer confidence for the month of September. August, we had a 134.2, which is a great, outstanding number. Forecast was supposed to tick a little bit lower down to 131.1, and however, it dropped quite a bit down to 125.1. This seems to be a lot of it has to do with the talks that the tension that rose during the month of September or August September for between the U.S. and China, and that kind of brought down a little bit of that confidence. As we're getting a little bit more progress made between the U.S. and China, you may see that tick up further. But as a result, you see the confidence level kind of dropped a bit for the month of September. So let's go ahead and take a look here at the headline news. Stocks are up this morning, and it's actually taking its cue on reports that are being made about progress being made with China. The lower level meetings that just took place the other week, they're basically stating that things went very well. Things are moving forward. Trying to place some more orders for soybeans and drop some of the tariffs. U.S. has been kind of following the same suit, so things are kind of looking a little bit more rosy between the two, and which is obviously investors are liking that. And then the schedule for the higher ups. Uh, uh, I think the Vice Premier Liu will be coming here in mid-October. I thought it was initially going to be beginning of October. It sounds like it's going to be more like mid-October now, and then that will continue. Also, there's reports that came out in the UK top court ruled that the Prime Minister Boris Johnson violated law when he suspended Parliament last month, and and that was kind of a part of a strategy with the Brexit. Uh, so that kind of broke that kind of helped basically spike the pound over in England or UK, spiked the pound in valuation to the dollar. Also, help easing with oil prices. Saudi Arabia's reports coming out that Saudi Arabia is making progress after the drone strikes the other week and restoring oil production. So that's helping things out, stabilize in the oil prices. So let's take a look here at the bond market. Bond market's actually not too bad. Yesterday we were up quite a bit. As you see, we were touching the 25-day moving average. However, we did end up in negative territory at -5. But for most of the day, we were actually up. I would say, around 14 basis points. And today, as a result, we're still above the at least the 50-day moving average. We're going to go up against the 25-day moving average. Currently, we're up about 11 basis points. I'm going to say because where we were yesterday, we're about the same pricing. Pricing is unchanged, even though yesterday we said up 14 basis points, so we lost a lot of that, and we actually went negative in the day. And then today we're up 11. So right now I'm going to say mortgage rates could be unchanged from where we were. However, if you look at these pattern here, we got this pattern here. Um, we got we got going on here. Looks like we're getting what they call a pennant here, and basically what that means is that a change of trend line. We may have a breakout here very shortly, and the trend seems to be that it's going to indicate that the bond market will maybe continue going upwards here. Now, the concern is Friday's numbers. We do got the PC coming out. CPI has risen. PCE comes in with a little hotter number, uh, which is higher inflation. That would not be good news for bonds. We'll have to see how that plays out, but that's the concern. In the meantime, this looks like this could break out and help us get a little bit better rates, at least in the short term here. Within you're talking a few days here. Friday, I'm not sure how much of an impact, but typically, it's not with the Fed cutting rates, and if inflation goes upwards, that's not going to be good news for bonds. So here's same thing. Kind of, we're doing the same thing with the 10-year Treasury. We're sitting right about where we were yesterday at 1.67. Yeah, right about the 1.67 range. We were down here yesterday. It worked its way back up to about 172. Now it's down to about 1.67. Same thing, we're getting that pendulum. We're kind of look like it's going to break to the bottom, like it's going to drop further. And that's in the meantime, let's enjoy, hopefully get some better pricing. But right now, definitely, if you guys are out there, float it for a little bit. We got at least a few days before you have to make a decision to lock or not lock for ahead of Friday. Is what I would recommend. So kind of make your own decision. Okay, that's pretty much a wrap. But if you guys are looking to refinance or buy in California, I am a loan officer, and we do help. I help out a lot of people here. We can. I work with Pinnacle Home Loans, and we got a variety of loans as well, loan programs, and we could find the right one for you guys in your solution. If you want to reach out to me, you can direct message me, DM me, or just go ahead and email me. Those are the best ways to reach me. I do get a little busy on the phone during the day, so I can respond a little bit quicker to those and get back to you a little quicker via a direct message or, again, email. You guys have a great rest of your day. Thanks so much for watching, and we'll catch you guys tomorrow.